LC, how you feeling, brother?
I'm feeling good. I'm feeling good. I'm definitely excited to do this because one of the reasons why I decided to go to YouTube to actually start to talk about cryptocurrency is because I understand this is going to be one of the biggest wealth transfers in our generation, and not just even our generation, in history. So there's never been anything like this. I think the only thing comparable would be the internet boom, and this
Yep.
is already bigger than the internet boom, and we're not even halfway through. So some people think that we're just is going to be like a 1 year, 2 year cycle kind of thing where you can make the most money now and then it's going to go away. No, it's a growing industry. It's still in its infancy. So we have all this huge volatility, but this is something that's going to last forever. Just how, I mean, granted, in the 90s, I was a kid, but doing research, I seen how the internet boom or the internet bubble, as they like to say, they basically said that the bubble popped, but as you can see, we're on Zoom right now on this call. We use Google every single day. There wasn't a bubble where it popped and there's no more money to be made. That was just the beginning stages of the internet. So a lot of projects failed, but all the good gems, which i.e. a Google, i.e. a Microsoft, they last and they moved into the future, innovating the space. And now we can't live life without internet. That's the same way I feel about crypto.
Mm-hmm. Yeah, that's a really good point, man, because I think about the 90s when the internet came out and people thought because it wasn't something you could touch, feel, it wasn't tangible, that it wasn't real. There was skepticism around something existing in a cyber space. And
Exactly.
you talked about Google and Amazon and Microsoft and eBay. Those are like Web 1, like phase 1, where the internet democratized commerce and it democratized information. And then there was like early 2000s, we went into Web 2, where it was social media, where we had social networks like Facebook and Twitter and YouTube,
Exactly.
where now we were able to build networks and communities globally. And now we're moving into phase 3 or Web 3, where we're now able to provide finance and a value exchange for those networks and that commerce network. So each web system or phase has built upon itself to now become the future of what we live in. And like LC said, man, like the things that are happening right now seem very small or immaterial in some sense. Like we don't know how long this will last, but I think this is a revolutionary technology that is going to transcend all other technologies. Like it will last long beyond our lifetimes. And why I think it's important, specifically for Black Americans, is because we know there's
Exactly.
a wealth gap that exists. And if we can get in now and be a part of this at its infancy level, there's an opportunity for us to grow our wealth exponentially.
And the thing is, as you can see, black people are typically always late to the party when it comes to anything on the financial basis. So I put it upon myself, you're putting it upon yourself to actually try to educate black people. I would even go as far as to say brown people because they kind of throw us in the same boat, but especially black people. Learning this technology or learning this space because you picking up a book, you come into a webinar like this is doing a lot more than someone else that is just watching Netflix today. Now you have some kind of borderline education. So when you see things moving out there, you can see if it's a good thing to invest in possibly, or if it's a bad thing and you actually keep your money safe in your pocket. So this is some of the things that you need to do. Come to these webinars, go to YouTube. YouTube right now is one of the biggest wealth of information because a lot of people in traditional markets aren't talking about things like cryptocurrency. So if you want to be first to the party, go to YouTube, pick up books, and learn yourself, and just research the space. Just be a part of it. Even if you're not investing right now, doing things like this, you're doing yourself a huge favor.
Mm-hmm, mm-hmm. YouTube is a huge resource. That's literally how I've learned all that I know about crypto. And what I did, I started off investing very small so that I would be interested, so that
Right.
I have some skin in the game. And then I wanted to learn more about my investments. And then I continued to learn more. And my mind was blown to confetti when I realized that this is something that is going to change the whole world. So putting things in perspective, there's a $500 trillion monetary planet. All the money on the planet is around $500 trillion. The outer layer is fiat currency. Then there's stocks, bonds, and real estate. Then there's commodities like gold, silver that are probably worth about 10 trillion. And right now there's Bitcoin and other cryptocurrencies that are probably almost at over $1 trillion monetary network right now. So Bitcoin and crypto has about 1 trillion of 500 trillion. And it's really, really very early if you put that in perspective. So today, we're going to talk about the technology, but I want to go through our agenda, which will be, what is the problem? And this is going to be an economic kind of conversation around why people think cryptocurrency is important. What is the blockchain? So thinking about the technology, because what I understand and what I see from people who invest in crypto, they don't understand the technology. So they think it's a fad. If you understand the use cases and how it's going to be integrated and used in everyday life, then you see this is a solid investment, and not to get so emotional about the volatility. We'll talk about what is DeFi, which is a new term, which I'll let Lawrence talk about that because that's not really my wheelhouse. We'll talk about the top coins, altcoins, and meme coins, and what's the difference, and which ones you should maybe think about investing in. Then we'll talk really heavily about risks and concerns, because that's probably the most important thing with investing is the risk. Everyone has a different tolerance for risk. Everyone has a different level of cash that they're willing to invest or lose. And we want to talk about all of the issues that you should be considering when making investments in cryptocurrency. And then we'll just talk about some strategies. Really just diving in off top. The question is, what is the problem right now economically? Why is cryptocurrency important? Why are people taking money out of the stock market, out of gold, out of bonds, and putting it in cryptocurrency? LC, what's your thoughts on that?
So I wouldn't even say just taking their money out of other asset classes, but people are just removing their money from just keeping it in fiat. So just holding money in a savings account is not the smart way to go about doing things now, because I mean, even outside of all the money they just recently printed, I actually just shot you over a picture. Basically, between 2020 to 2021, there's over 20 trillion in circulation right now, right, in America. Now, prior to that, it was more so around 6 trillion. That means because of the pandemic, and understandably, a lot of people needed these payments to make sure they're living life. But if you look at the long-term trend of things, it really hasn't set in as of yet how much money we printed. This is the most money we ever printed in American history. And it's not even by double or triple, it's astronomical. So with that, you keeping your money as just fiat currency in a bank account, you're actually going to start to lose money and not even see it. So also what I like to teach on Law Crypto on my YouTube channel is basically showing people that you keeping your money in fiat currency, that is just going to now, okay, you can still buy coffee at the same price. You can still go shopping and you pay for your Netflix account at the same price, but it's going to be harder for you to actually break into wealth. The lower middle class, they have a good chance of breaking into wealth now, but the poor is not going to even be feasible in the next coming years. So asset classes like bonds, stocks, commodities, real estate, crypto, and art are going to be the ways that you actually grow your money. And if you keep it in fiat currency, you're not going to be able to break into these asset classes because they're going to be astronomically higher. So even if you look back...
So I just wanted to chime in and piggyback on that. With 21% of all of the currency that's in circulation right now being printed in 1 year, the key word that I was looking for LC to say is inflation.
100%. I was getting there.
Yeah. So when people see, oh, I got a free stimulus check, $1,400, that will help you pay your rent for 1 month. But the price of gas, the price of bread and groceries, the price of coffee, the price of everything in society is going to go incrementally higher. And so if you live another 30, 50 years, you have spent that $1,400 25,000 times on groceries and everything else, because everything is exponentially higher, right? And so...
And the key point, though, so like you said, all those things are going to become incrementally higher, but the asset classes are going to be astronomically higher because smart money are parking their money in these asset classes.
The U.S. government doesn't want you to hold cash. The system was never set up for us to have all of our money in cash, holding it under a bed and putting it in a savings account. Literally in the 60s and 70s when our parents were growing up, there might have been an 8% yield in a bank savings account. How much is a bank savings account yield now? It's less than
1%.
zero. It's like 0.01%. You get nothing from holding your cash in a bank. And what do people with money, what do wealthy people do with their cash? They put it into a business. They put it into a stock investment. They put it into real estate. They invest their money as soon as they get it. Okay? And so the real way to become a full participant in the economy is not just to consume, but also to produce from a business perspective and also to invest your money. Fiat money, by definition, is government issued currency that is not backed by commodities such as gold. Fiat money gives central banks greater control over the economy because they can control how much money is printed, okay? So every country has its own fiat currency, which is why a lot of these countries, and we'll talk about risks and concerns, a lot of countries don't want cryptocurrency to become pervasive because it will devalue or take monetary energy out of their currency, okay? So what I want you to take away from what is a problem is that you don't want to hold cash. You have to invest in something. Now, if it's not cryptocurrency, maybe it's real estate. Maybe you start a business. Maybe you do bonds, but bonds really aren't worth much right now either. But you have to decide what you're going to invest your money in to store the value so it doesn't become inflated or debased. Making sense?
Yeah, and to piggyback off of that, basically what you're saying is if you don't put your money in these asset classes, and cryptocurrency has the most volatility and is making millionaires overnight during the bull cycles. I'm actually going to get into the super cycles of cryptocurrency in a little bit. But if you're not putting your money in these different asset classes, you're actually doing yourself a disservice, and not just you, your family. That means your legacy. The way you feel now, if you're in middle class, the next generation, if they live in the same way, they're going to be a lower middle class. And then the next generation after that is going to be poor. And it's not even like a scare tactic or anything like that. I'm really saying, because I do macroeconomics as well. So looking at things from a macro level and then going into cryptocurrency, I see that this is one of the number one things that people can do to actually grow their money and grow their wealth. Because if you don't do it now at this point, it's going to be very hard to do it in the coming years.
Absolutely. So cash is trash. What will you invest in? So now let's move into the blockchain. Now, this is something that I had to do a lot of research on because it's a new technology, and technology can be really hard to understand because it's something that we've never wrapped our mind around. If you haven't imagined it, you haven't used it, or you don't work in that space, it can just be a language that you don't understand, and it can be a process that is hard to understand. So I want now to have LC break down what the blockchain is and how cryptocurrency is using blockchain. If you understand the technology of the cryptocurrencies, I think it makes it feel a little less risky because you understand the investment. So LC, what is blockchain?
So basically, blockchain is the glue that makes all cryptocurrencies work. If it wasn't for blockchain, then there will be no cryptocurrency technology. And without crypto, the blockchain can still be successful. Like you see, JP Morgan right now and Citibank are using blockchain technology for a lot of their transactions that they do globally. So it's actually a system that is a record that it actually keeps track of, that can't be duplicated, or it can't be hacked. So if you look at the blockchain, if you made a certain transaction or a certain purchase, the blockchain is going to say all these computers connected around the world in this unique way. This is LC, or this is JB's transaction. What I like to use is the metaphor how a trustless system works. So typically why we use money and why we use banking in the traditional way is because we don't trust one another. That's it's clear and simple. If you give money to a stranger, honestly, you being the grown up that you are today, you know there's a possibility you might not get that money back because you don't know that man. You don't know his merit. You don't know his character. So we go through banking systems to show, okay, if you give a certain amount of money here, you'll be able to get it back. You trust the bank. With blockchain, it's a trustless system. That means you don't need centralized bodies anymore because the blockchain is going to record that record. And now you can send money to Jim all the way around the world to make a trade because the blockchain is going to record that record, so you can't be cheated.
The blockchain cuts out the middleman.
Exactly.
And it's a decentralized, distributed public ledger. Essentially, it's a ledger that keeps track of all the transactions and they're all verified and recorded in a unanimous fashion. So the blockchain transactions use cryptography to keep the network secure and verify all of the transactions. So people use computers to mine. You might hear Bitcoin mining a lot. Right now, people are comparing Bitcoin to gold, because gold historically is a store of value. People who don't want to hold fiat currency or cash look to put their money in another asset class that can hold value more than cash, because what happens with cash is people print more cash, therefore the value is less. Similarly, Bitcoin is an asset like gold, where people want to store their money in this asset. And so the way that they created it was saying that when you create a new Bitcoin, they give it the term mining, as if you're basically digging it up from cyber crypto space, and now it is now a coin that can be bought, sold, and exchanged on a marketplace. So that's kind of an understanding of what blockchain and how mining is working.
So basically with Bitcoin, they use a system called proof of work. So what you're saying with the whole mining analogy, we use mining because it actually takes work to dig up gold. We all understand this. If there aren't machines all around the world that's digging up gold, or at least finding the gold, that all takes money. So now it has more value because you had to put this much work into finding that gold. So with Bitcoin, they have computers that solve these complex problems. Like a human wouldn't be able to do this. There's a lot of computers all working together around the world that are using a lot of power, and a lot of people think about the environmental concerns. So it doesn't actually give off more emissions than it takes to actually mine gold. So that's the FUD, the fear, doubt, and uncertainty that the media likes to push out there. A proof of work system is a lot slower than where the crypto market is moving today. The crypto space is going more into proof of stake and things of that nature, but we'll touch on that. But this is basically why we use the terminology mining.
Yeah, so we'll talk more about the difference between Bitcoin, Ethereum, and altcoins a little bit further along. But just understanding that blockchain is removing the middleman like banks. And one of the use cases that I really like about crypto and blockchain is that, imagine when you want to send money to someone in Europe, or you want to just move money from one bank to another bank over the weekend. It's going to take 3 to 5 to 7 business days. If the bank holds your money, they basically loan it out and they make money off your money while you're waiting for your own cash. You can't even transfer money between banks. Cryptocurrency eliminates all of that, where you can send money globally instantly. And that to me is revolutionary in itself. So now let's talk more about decentralized finance, which is kind of just piggybacking on the conversation that we just had. There's a quote that says, "Don't trust, verify." And that's one of the popular quotes or phrases that you hear in the crypto space, because trust is requiring a middleman and verification is requiring basically a system or proof of stake or proof of work to authorize transactions. So LC, talk more about decentralized finance. Is it different from blockchain, or how is this term being used in the crypto marketplace?
Yeah, so like I said earlier, that all cryptocurrency is built on top of the blockchain technology. So decentralized finance are different ways and strategies to make money and gain yields on your investments based off the blockchain technology. So nothing can be done without the blockchain technology. Now, with DeFi there's multiple different ways to make yields on your different assets. So if someone wants to buy Bitcoin, okay, boom, you can buy Bitcoin, you can hold it on your wallet, your cold wallet, or you can hold it on the exchange, but it isn't doing anything for you other than raising in price. But now what you can do is you can wrap your Bitcoin, and it's a little more complex, but you can wrap your Bitcoin by using one of these solutions and put it in their vaults. So now by you just holding your Bitcoin, which you would have done anyway by holding it in a wallet, you can hold it in one of their vaults on one of these projects or one of these companies, and you'll gain yields on it. So like how you would hold your fiat currency after you get paid, you probably put some in your checking account, you put some in your savings account. You're not gaining over 1% a month on that money that you put on your savings account. A lot of these projects, now that you hold Bitcoin, you can wrap it in one of these decentralized projects. You can get up to 10 to 100% yields.
Yeah, I'm using an exchange called BlockFi, where I receive like a 6% yield just for holding my cryptocurrency there. And I got put on to them from some YouTube influencers who talk about economics and investing, and they share their promo codes or their basically their codes, and you get free Bitcoin. So I'm going to return the favor to you guys and share some of my crypto exchange accounts with you. But before I do that, I want to just break down the different crypto exchanges, because a crypto exchange is where you can buy and sell your Bitcoin or your cryptocurrency. So that's a question that many people ask, and that kind of is a hurdle or roadblock for many people getting involved, because we don't know where to start. And historically, I like to give a Black perspective on all of economics, all of life here in America. We, as a culture, as a people, were marginalized from investing because there was a level of information that you had to have. You had to have access to certain banks. You had to have a certain level of capital or be able to pay fees just to get access to the stock market. So we were already pushed out from a sense. And in this modern era of technology, we're thinking about Web 2 and Web 3, we have apps like Robinhood who have completely democratized finance and investing for everyday retail investors, which is why I really do like Robinhood for a lot of reasons. You can buy crypto on Robinhood, but there's pros and cons to that. They're not technically a crypto exchange. However, they do offer Bitcoin, Ethereum, Dogecoin, and maybe Bitcoin Cash. They only have like 4 or 5 different types of coins there. The exchanges that I am most familiar with that I would highly recommend you check out are Coinbase, BlockFi, and Binance. LC might have a few additional recommendations for second layer investing, but let's just talk about any of these. Which one of these that you feel like is like worth investing or worth starting out with, or maybe not?
Right. So the what we call them in the crypto space are on ramps and off ramps. So your on ramps are going to be your centralized exchanges, which I use is Coinbase and Binance. But Binance is the biggest cryptocurrency exchange in the world, and with new government regulations back in 2020 for the U.S., we don't use Binance anymore. You can't use Binance, so you have to use Binance US. So it's the same company. They just made their own specialized exchange just for U.S. citizens. So it will be Binance US. But just going off of what you said before is how Black people weren't able to bank and they weren't able to invest because of everything that has happened in U.S. history. What we have to understand is we've always been late to the party, and we've been held out from even being able to get into the party. And what a lot of these other folk have been able to do was invest their money. And this is back when banking was first getting started. So you had higher yields because it was so new. It was still a new concept to invest in a bank, and then they can give you returns. So what DeFi is really doing is it's cutting out that middleman, like we talked about earlier. So when you cut out the middleman, now you can get most of your returns. These exchanges or these projects or crypto projects, they're basically investing your money in different fashions. So there's thing called LP tokens when you get yields, and you can get interest on providing liquidity. You also have staking when you stake your coins and your assets, like I was talking about with Wrap Bitcoin. You can actually stake that in a project and you can get yields on that. But there's a lot of other projects out there you can actually stake and you get higher yields. You also have lending, borrowing, and other interests that you get from using these exchanges. Now, with Coinbase, so the example basically back investing early when people were banking, they were able to get higher yields. And as you can see now that everyone is banking and everyone's at the party, the yields get a little smaller. So now when you invest in a Bank of America or Wells Fargo, your savings account, you're only getting 0.05%. So there's so much people in that same room now. So just like Bitcoin.
And there's so much currency being circulated in the economy.
Right. So with Bitcoin, you can have something like Bitcoin. You can get, like JB just said, he's getting 6% in yields by investing in BlockFi. I invest in a lot of smaller projects. Bitcoin is a large cap. I invest in mid and small cap gems. I like to call them gems, or micro small caps. And when you have these type of projects, some of them have yields up to 1,000%. So a lot of people, they just jump into stuff because they see how crazy the price is going, and they say how much money that you're getting back. But if you're not investing in those quality projects, so I'm a value investor. If I'm investing in something, I'm gonna buy something of value, and then I'm also early, so I'm getting something that has a high yield and is gonna grow astronomically over the course of the time. So I'm early to the party getting these high yields, and I'm able to do that with DeFi. So Coinbase and Binance US are going to be your on ramps with a centralized exchange. Then you want to get into a decentralized exchange, which is your first step into DeFi. So from a Coinbase, I use Ethereum. I send that to something called a Uniswap. So Uniswap is the top decentralized exchange right now. And with Uniswap, is how you get into the deeper end of the pool, invest in these other projects that I'm talking about. So with
I'm gonna stop you there because you're gonna blow their minds going into second layer.
Yeah, you're right. All right. Yeah,
y'all gotta sign up to get get those gems.
Right. I do consulting.